enjoyed a spectacular showing in 2013, and Credit Suisse believes the market will continue its upward trend in 2014. Increases, however, will be less significant. With us to speak about what the coming months hold for investors and the improving risk environment is our Global Chief Investment Officer, Michael Strobaek. Michael, at the end of January, it seems as if not much has changed so far in comparison with last year. How would you assess the start to 2014? Have certain developments surprised you?
That is correct, not much has changed, but we've started the year with higher degree of certainty around Fed policy and tapering in the US. They gave a very strong message to markets that they will modestly begin to taper, but at the same time they coupled that with forward guidance communications which reassured markets that short-term interest rates are actually going to stay low for quite a while. And what we've seen as a consequence of that is, for example, in peripheral bonds in Europe, that spreads to core bonds in Europe have contracted, and we've seen somewhat of a rally there. It may also be related to the ECB stress tests. But overall, the economic backdrop of markets is still in place and looks to become a good year again in 2014.
At the beginning of the year, you removed the equity underweight in the mandates. Were you too cautious in the second half of 2013?
Well, with the benefit of hindsight, it's always easy to say what have been right or wrong. We felt at the point in time when we went underweight that there were meaningful risks that the ongoing debate around tapering, fiscal deficit and debt ceiling in the US could pose a risk to markets overall, and in particular tapering could pose a risk to sharply rising yields. We have all these factors behind us now, and this is one of the reasons why we've said, given the positive economic backdrop, given the positive trend in equity markets, that we need to go back.
So with that said, are the risks lower now?
Well, I have to be a little ambivalent about the answer, and the answer is yes and no. In terms of the uncertainty around the Fed and tapering, the risk of, if you will, sharply rising interest rates because of a nervous market have clearly gone down. But a lot is also today now priced into markets. The positive global economic development, the lower risk of tapering, the fiscal debt situation, debt ceiling debate, all of these risks have actually gone down, but the pricing level has gone up as a consequence. And we should expect that the markets also, in particular this year, will be more volatile. We were very blessed by almost a straight line increase last year, and that is an unlikely development second year in a row, and therefore we do expect lower returns from equities in 2014.
You answered this question with both yes and no. If these particular risk factors have disappeared or at least diminished significantly, which risks do still exist?
Well, the risk that we, as I said, on the one hand is price levels have gone up. The second risk is that at some point in time during this year probably, if growth continues to be strong or even surprise on the upside, that the uncertainty around the forward guidance that the Fed has put in place may be tested, because the Fed has now anchored its credibility to forward guidance, i.e. keeping short interest rates low for quite a while. And if growth and therefore potentially inflation was to become a topic, that can make the market very nervous. So that is, if you will, the second risk. One on pricing, and things have gone up very decently in 2013. And secondly, as we move into 2014, the risk actually that growth surprises to the upside and therefore forward guidance is put in question.
Is that the reason why you have neutralised the equity underweight but not entered overweight?
It is.
Yeah.
And we do expect that if we see increased volatility and therefore swings to the up and to the downside, we will actually reinstate an overweight position if that the underlying fundamental trend in equities is still intact.
Thanks, Michael. For more information on market movements and global trends, check out news and expertise on the Credit Suisse website.